We've both had a fair amount of experience in real estate, and Charlie made his early money in real estate.
The second point is the more important point. Real estate is not a commodity.
But I think it tends to be more accurately priced. Particularly developed real estate more accurately priced. Most of the time. Now, during the RTC period, when you had huge amounts of transactions, and you had an owner that didn't want to be an owner in a very big way, and they don't know what the hell they owned, and all that sort of thing. I mean, you have a lot of mispricing. Then, and I know a few people in this room that made a lot of money off of that. But, under most conditions it's hard to find real estate that's really mispriced. I mean, when I look at the transactions that REITs engage in currently, and you get a lot of information on that sort of thing. They're very similar, but it's a competitive world and you know, they all know about what a Class A office building in Chicago or wherever it may be, is going to produce, so at least they have.
They may all be wrong, as it turns out, because of some unusual events, but it's hard to argue with the current conventional wisdom most of the time in the real estate world. But
occasionally there've been some, there could be big opportunities in the field, but if they exist, it will certainly be because there'll probably be a lot of chaos in real estate financing for one reason or another. We've done some real estate financing and you have to have the money shot off.
To quite a degree, probably to get any big mispricing across the board. Charlie?
Yeah, we don't have any
competitive advantage over experienced real estate investors in the field, and we wouldn't have if we were operating with their own money as a partnership, and if you operate as a corporation, such as ours, which is taxable under Chapter C of the Internal Revenue Code, you've got a whole layer of corporate taxes between the real estate income and the use of the income by the people who own the real estate. So, by its nature, real estate tends to be a very lousy investment for people who are taxed under Subchapter C of the Code relating to corporations. So, the combination of having it generally allows the activity for people. With our tax structure and having no special competence in the field, means that we spend almost no time thinking about anything in real estate. And then such real estate as we've actually done, like holding surplus real estate and trying to sell it off, I'd say we have a poor record at it. Yeah, C-cards really, it doesn't make any sense. I mean, I know there are C-corp around that are in real estate, but there are other structures that are more attractive. There really aren't other structures. I mean, Lloyd's is an attempt at it. To some degree, but there aren't other structures that work well for big insurance companies or, I mean, you can have a Walmart very well, but that does not exist in the CE Corp.
So they are not subject to S-corp or partnership.
That determines the returns on capital in the discount store field. But if you're competing with the equivalent of S-corp, REITs or partnerships or individuals, you've just got an economic disadvantage. As a CE Corp, which is, for those of you who don't love reading the Internal Revenue Code, is just a standard but vanilla corporation. That you think of all of the Dow Jones companies, all of the S&P companies, and so on. And as Charlie says, it's unlikely that the disadvantage of our structure combined with the competitive nature of people with better structures buying those kinds of assets will ever lead to anything
really interesting, although I would say that we missed the boat to some extent during the RTC days. I mean,
it was a sufficiently inefficient market at that time, and there was a lack of financing. That we could have made a lot of money if we had been geared up for. At that time we actually had a few transactions were pretty interesting, but not.
We thought significantly about buying the Irvine Corporation when it became available, so that's the only big one I can remember that we seriously thought about.
Yeah, that was in 1977 or so.
Way back.
Yeah, Mobil Oil was interested, and Don Bren ended up putting together a group for it, but that kind of thing could conceivably happen, but it's unlikely.